So hello, everyone. Welcome to the final interactive session of the day, from open banking to open accounting. And we will be looking at how real-time data empowers banks and private lenders to be competitive. So if you didn't hear me what I said just a minute ago, you can respond to our poll question in the polls tab. And if you have any comments or questions for the speakers, please post them or paste them in the chat, write them in the chat, and we will get to as many of them as we can. Right now, though, I would like to turn to my fantastic panel and ask them to introduce themselves, tell us a little bit about who they are and where they're coming from. So if we could start with you, Michael.
Of course, thank you very much, and thank you very much for inviting me to this event. I'm very intrigued and very interested to hear what this will bring. My name is Michael. I'm from Denmark. I work out of Copenhagen. I've been in finance for 20 years, and mainly in Copenhagen and London. And right now, I am the founder and CEO of Compass Bank, a new neobank aimed at the SME lending market in Europe. Obviously, with a lot of focus on technology and open banking, open accounting, etc., etc. So this is our proposition to sort of change the available capital in Europe, which we would like to make as efficient and as plentiful as we can see in the US and in Asia. But Europe is not quite there yet, but we'll solve that problem.
Thanks, Michael. And if we can turn to you, Dustin, and a special thanks to Dustin, for whom it's 6 a.m. Looking very lively.
No, that's good. Thank you. As you said, I'm Dustin Phillips. Work with a bank called CC Bank. We've been around for about 25 years here in Utah. We're a local community bank, about 500 million in assets. My career spanned the Midwest as well as the West Coast, and now in Utah for about 25 years, and primarily focused on community banks. I think there's a different feel from the larger national banks to the local community banks, and that's a space where I've been. And most recently, we've partnered with Karen and Boss Insights on some products that have launched us into this arena where it's been super helpful and enabling us to reach our clients and attain our mission. So I think that's what's brought us here to this forum.
Thanks, Dustin. And that's a great segue into Karen introducing herself. And I know that we'll pick up in more detail on some of the issues that you just raised there.
Hi, everybody. Great to be here. I am Karen. I'm the CEO of Boss Insights. I started working as a commercial and business banker myself, and it was at a large national bank. But just over the discussions I've had with Dustin, he's the chief lending officer, I realized that the entire time I was not the best fit there. I was much more of a community banker at heart myself, customer first always. And when we started Boss Insights, we really wanted to get the customer to have a seat at the table. So give them the easiest way to share their information and give the banker the easiest way to approve those loans, which is that top 3 capital need. We've been working in market with incredible innovative lenders, banks, credit unions, and private alternative lenders for about 3 years now. And we're really excited to be here and be chatting about open data and open accounting.
Fantastic. Thanks for that introduction. And I'd like to kick off with a question that I'm going to put to all 3 of you. And perhaps we'll start with you, Michael, if that's okay. Can you share with us your definition, your view on what open banking is, and on what open accounting also is, and how it benefits the business customer? So if you could give us that view on open banking and open accounting, that would be great. Michael, I think you're on mute. There you are. You're back.
I am. It's my first time on a video call, so please bear with me. We've done nothing of the sort the last 11 months, so apparently I have. So sorry about that. Thank you very much for that question. So open banking comes in many forms and many directions, and obviously we can debate one I mean, there's 1,000 reports out there from everybody that defines in a different way. We define it as a way of collaborating with other people, as a way of sharing data between entities with the accept of the customer, of course, and allowing APIs to become the real oil in the machine between the different systems that we operate in order to give the customer a much better product. And the difference between what we do and what we see elsewhere is probably that, you know, from many since the 90s, people have been looking for this one-stop shop event. I mean, that word one-stop shop makes me cringe a little bit, because I think it was a great idea, and it was a brilliant idea when it came out. The problem is the evolution of technology and product development is so fast that if you want to produce good, excellent products for your customers across the board, well, then you need to be the world's best at many different things. And we have built a bank here where we define ourselves not by doing that, by partnering up with people who are actually world's best at what they do. Then we are the world's best at what we do, which is supposed to be vendor management and credit and SME lending, but then we leave everything else to others. So for us, open banking is the ability to collaborate and ability to share data with others that also strive to be the best in their field, which is very different from the universal approach that many other banks have. They want to produce a lot of different, especially in Europe. I'll try to make this brief, but the problem is the banks usually have a constrained market, which means that they go into it, they become really good at something, and then they max it out, and then they say, how can we grow? How can we develop? We're not able to cross borders in Europe. That's very difficult. So instead, we expand our product suite. So we go from being good at one thing, then we add, from corporates to retail to industry to trading to investment banking. So you evolve your market, you grow that way. We go exactly the opposite. We stick to SME banking in various products, but we don't do any retail. So instead, we have developed a technology through open banking that we can then sort of scale ourselves to geography instead, which is very different. And open accounting for us is the ability, again, to get live data into our assessments and get a much better insight into who we're conducting business with. And obviously for the customer, it's a no-brainer that they can use our ability and our skills to predict when or where they will need financing and in which form. And again, helping themselves in terms of getting a better credit rating, right? I mean, better data almost always leads to a better credit rating because you take out uncertainty. It may be the numbers are not good, fair enough, but then certainly not going to get any better by having them, 1 to 2 years old.
Yeah, fantastic description, Michael. And Dustin, it'd be really interesting to turn to you both from the perspective of a community bank, but also one that's based in the US, where open banking's been driven by very different forces. So can you share with us your definition on open banking, open accounting, and touch a little bit on how it benefits your customers?
Yeah, it's great to answer that question as well. And we do have a little bit of a different perspective, but still very similar in the sense that in the US, a lot of the feeling is that the products aren't very different. Banks are very similar in our target product that we deliver. But where I like to focus more, I think as a community bank, we focus is in the customer experience. So we're all trying to reach the same customer. We're all trying to provide the same product, whether it's a deposit account or a lending product to finance, whether it's a business or a purchase of real estate or whatever. But it's the experience that we're focused on in having with our client base. And so having the open banking, which is the method of sharing the information or gathering the information from the client, allows that to be much more efficient, allowing us to focus more on the experience with the client. So being able to capture the current real-time information much more quickly, being able to move them through the process much more efficiently, and giving the client a much better experience. And Michael did say, as far as the quality of the information, the more real-time quality information, the better decision we're going to make. And so we as a bank do a better job of delivering that experience to the customer and trying to achieve the goals that we're set out to achieve. So definitely it's a great way to maximize the time that we have. I mean, I have experience working with people that have worked in banking decades ago, and the experience that they had with working with their customers was so different. Obtaining information on handwritten paper or getting a credit report that is handwritten or typed from somebody reading something over the phone. We've evolved light years beyond that, and so the ability to gather information quickly, digest it, process it quickly, with a focus and intent on building that client experience.
Great, thanks for that. And Karen, turning to you and thinking about what Justin and Michael have just said in terms of how this access to data enables all these great opportunities to deliver better outcomes for customers. Can you give us your view on that?
Yeah, absolutely. I mean, brass tacks, open banking is just the ability to have access as a business customer to your own banking transactional information so that you can see it and use it however you need to, and so can the financial institution you're working with. And then open accounting takes it one step further. The issue with banking data is that it's transactional. It's sort of the day-to-day information. Hard to make a lending decision on that, although some alternative lenders are using it. It's easier to sell other products on it. But accounting, open accounting information is the act of taking the data, the balance sheet, the income statement that you would need in order to process a traditional loan, and opening that up, having access to it so that you can make a decision. If you're a financial institution looking to lend to a business, it is staggering how much time is spent just trying to get that business to send their data, because the act of doing so is so painful. You have to download it off of a cloud system and send it to an accountant and then get it captured and then attach it to email. And it's just, you don't do that once, you do that over and over and over again as you service the loan. Open accounting eradicates that completely. So it's exciting times.
Yeah, no, I think you've put it really well there on how clunky that experience can be for users. Yeah. And Dustin, turning to you, I'm going to hit you with a quote from one of your business borrowers from CC Bank. "These loans kept us in business. We could not have done this without you. I would recommend CC Bank to anyone and have already." Happy customer. Can you tell us how you achieve this, particularly in the thick of the kind of COVID chaos that we've seen?
Yeah, unfortunately, the worldwide has experienced the COVID thing, and rather than focusing on the negative of what COVID has been, in the United States, there was the payroll protection program, the PPP loans that the U.S. government out and made available to businesses and relied on the banks to implement, and so COVID has been a horrible experience for all, but it opened up opportunities for a community bank like ours to service clients. We generated about $50 million in loans during a 60-day period of just PPP loans, and I would say about a third at least of those loans were to businesses that we didn't have a relationship with prior to the PPP loan experience. And so there were a lot of banks, large national banks in particular, who just weren't prepared and weren't willing to service the needs of their business customers who were devastated by the effects of business closures and quarantining and just the shutdown of our economic system. And so we took as an opportunity to step up and really dive in. So what enabled us to achieve it, I guess we could be thankful for COVID. but it was a matter of an attitude. It wasn't an attitude of, go off and pushing the clients away because there was uncertainty. It wasn't an attitude of turning away businesses that weren't our own. It was an attitude of a community bank that with open arms said, we're here to service the community. We're here to help you. And our government had stepped in and created this product, and we were going to deliver it come hell or high water. So we rolled up our sleeves and dove in and learned what we didn't know and figured it out and helped save about 400 plus businesses in our small community.
So presumably that legacy of the crisis will live on in the way that you deliver those.
Absolutely. With those clients that we had never worked with, as well as the ones that we already had relationships with, business clients have the opportunity now to reflect in hindsight and say, what was my experience with my previous bank? I had banked with this bank, XYZ bank, for years or decades or however long it was. And yet when they went to that bank for their servicing their need, especially in their dire time of need, they were turned away, or they were given to this clunky experience that was just catastrophic to them. It just was not helpful. And so we were able to step in. And so those clients are telling their friends, the word spread like wildfire. And so that legacy just built an opportunity for CC Bank to build on over the next years to come. And it's been a great opportunity for us.
Lisa, is it okay if I just add a little bit to what Dustin is saying?
Please do.
It's hard. I mean, we're 6 months later now, but $659 billion was put into the economy in 2 months. And every different geography had their own COVID funding. But it's hard to even describe, if you weren't going through it, what an uplift it was to go from lending on financial statements to lending on payroll information. It's just a completely new style of lending. And usually when we're in market, we're talking to lenders to say, you can take the exact same information and just speed it up. That's enough. But there were two styles of lenders who approached this challenge. The ones who just jumped on and lent to their existing borrowers, and then ones like CC Bank, who did not just open the door to this style of funding, which already was an uplift to the existing borrowers, but also added it to new borrowers, which is a huge increase in work that they had to do, because there's KYC provisions, because they have to really know, with any new style of lending, there's going to be issues with fraud, with compliance, with data. And you really saw the community banks step up. And usually everyone talks about things in terms of how many branches you have, how many locations, what's your brand. In this case, it was brass tacks. Are you going to support my business and I'm going to make it through or not? It was really a matter of survival. And I wanted to underline that how much CC Bank meant to the businesses they were in. I was on another panel discussion and I was talking about the CC Bank example, and a panelist said that I went through CC Bank and it was amazing. Those business bankers did everything they could to make sure the community was supported. So.
Thanks for adding that, Karen. And I've heard some great stories about community banks really delivering in the crunch for their, not just their customers as you described, Dustin, but their broader community. So thanks for adding that. And
thank you, Karen.
Turning to you, Michael, given that you're starting a neobank, how do you differentiate yourself with data?
Taking notes here because I'm thinking there's some great comments to be said. So I'm just listening and learning.
I'll send you the recording.
I'm building the bank based on this panel. Quite clearly, finance. We're in the business of commitment, right? That's what we do, and that is something that all financial institutions should take upon themselves to make them part of their DNA, which unfortunately is not happening. We know banks are really good and selling umbrellas when the sun is out, but then when it rains, they take the umbrellas away again. That is not the commitment that most customers are looking for. There's been a decent competition within banking. That means that, yeah, they have been looking towards what do you got? Where's your presence? Can I come? Can I this and that? And as Karen was saying, that shifted towards, well, whether we look at all these random different products and now moving towards, will you support me through this? So what we've done is that we've accelerated the credit process through automation, with additional data. So in Denmark, even though we are a highly digitized country, a lending process can still take 2 months, right? I mean, it's not uncommon that before the customer gets onboarded and all that stuff. And for us, we've taken that down to 36 hours because we think that is what we reasonably can do from an okay credit perspective and customer perspective as well. So, and then what we're doing is, so we got a bank license, and that's the license to play in a profitable pool. But effectively, what we're doing is we could probably have launched this company in any business, right? We just chose to do it in finance because we saw there's a lot of incumbents that weren't moving. But our DNA is leveraging data from a marketplace perspective, and the way we saw this was probably. I'm sorry, there's a little bit of an echo.
I'm just going to mute Justin for a minute while you're speaking, and see if that helps.
Okay, so my point is, what we've seen in Europe is that we have a complete lack of risk-willing capital compared to the US and Asia. And in order to leverage that and move Europe forward, we need to find a way to produce 4, 5, 6, 700 billion euros into the SME community, which is where jobs and growth happens. So how on earth do you do that? What's your vision? How do you get from A to B? And for us is that, well, you can only do that in a meaningful way if you can share the risk, right? I mean, there's no way we can build a bank that can take on, 500 billion worth of balance sheet in just a few years. That's just unrealistic. But what we can do is we can facilitate it, because there's a lot of pension funds and insurance companies and others out there who has a mandate, not just to take care of our pensions and make sure we all have a decent, life after we stop working, but also to support the local communities and the local businesses. But they can't do that individually. But what they can do is they can come to us and say, look, we'll give you a mandate of 250 or 500 million euros. If you could then source the loans out and produce them for us, and then we will give you a geographical area, we'll give you, an industry profile, maybe a green profile, what we want, then you go source it, and then you take a part of that slice yourself, and you sell the other tranches to the pension funds, while we conduct the collections and then the other operating factors of having a loan balance sheet. And you can only do that in a meaningful way and scale that size if you've got enough information. You cannot do that by having just 6-12 months old balance sheets. You need access to payrolls, vacation registrations, VAT, live accounting data. You need access to the salesman's GPS in their cars. You need access to Facebook and Twitter and all the others. I mean, you need access to all of it. And if you can get that, well, you know the company pretty well, right? You can probably help them, but then you can start automating stuff. You can start automating. You can give them the CFO they never had. You can give them the COO they never had. And that way, not only are you propelling these companies, you're effectively selling two things. You're selling longevity in terms of getting them access to finance through a prolonged period, faster, but you're also selling them a time machine, right? So basically, I'm asking you a question. Would you be interested in having a better capital structure on your company by having access to longer term capital? And would you be interested if I could free up 40 to 50% of your time? Would you be willing to listen?
Yeah.
And I think doing that, most companies will say yes. And getting to that place where you can free up time and you can differentiate yourself. This is what we're doing. We're differentiating ourselves by selling not just loan, but longevity and time machine. Then you can start leveraging in our world, you can start providing more capital to firms, you can provide jobs and growth, and you can have more people pitching in on how to lift the risk from a single bank and over to a number of family offices, insurers, pension funds. And that way you don't create a systemic concentration risk, and you have more people being basically taking part. And then I've got myself a distribution network and ambassadors as well, so it doesn't hurt that way.
So fantastic illustration of the power of access to data. Turning to you, Karen, do you see a difference between how lenders will approach data post-COVID?
Yes, absolutely. There's definitely a pre and a post-COVID in a lot of different ways. Michael said a lot just there, and the thing that just made me want to jump out of my chair is that SMBs, commercial businesses, they're the economic engine of the future. We're all here and have a job because their need for capital is a top 3 priority. And, you know, when Dustin was speaking, it's clear it makes a difference between are they going to survive or are they not going to survive? We're all looking at capital as the time machine that takes us to the future, right? That's what we're doing. So Boss Insights started with this mission to get businesses measured on their merit, on what they can produce, on how they can grow, not on their collateral. We keep looking, if this is the business, we keep looking at them on their collateral. And that is not how to measure a business. It's on their merit. And so what's different now is that before, if you approached a financial institution in 2019 and you earnestly said, I'm going to make it possible for you to speed up your data, I'm going to make it possible for you to accelerate things by 80% when you look at the deciding on the loan and servicing the loan, they'd say one of 2 things. They'd say, we've already done it, or they'd say, it's just not important. There are other things that are more important. And in 2020, it was brass tacks. We're all talking remotely. We're not doing this in person. So you couldn't say you've done it. You actually had to have a digital process. And when it was put to the test, I think most lenders found they were a lot more manual than they thought they were. I got so many flow charts, and then there would be this part, literally, some of them were Post-it notes and some of them were technical. And they would say, well, this is the Sarah check. Sarah's a person who's checking. Well, what if Sarah gets sick? What if Sarah has to take a vacation? That's not a digital process, and it doesn't help us go through. So now the question that all the lenders are asking us is, why should I buy you and not build you myself? And once I answer that, if you want to have one integration to an accounting software, you should build it. But if you're looking at any more than 3, and if you want any other categories, you need to buy it, because there is a lot of expertise that goes into gathering information from different places and making it standard. And then the next question is, okay, so I get it, I should buy something, but why should I buy you? And that is a hugely different question from last year, which is we got this, we don't need you. This year it's, why should I buy Boss Insights over all other data providers? So we have to explain, you want the ease of the information, you want the flexibility, you don't want anyone telling you what your lending model should be. That's why you get a lot of different sources rather than just a narrow set. Do you guys agree? Is that what you're seeing the difference is this year and last year?
Just a reminder to Dustin to unmute yourself. I muted you temporarily, but you need to unmute yourself. And a reminder to everyone watching to please post your questions in the chat. We're already over halfway through. And as I know Michael's taking notes on building his bank, please add any comments for him as well. So Dustin, turning to you, if you can unmute yourself, you have, thank you. By the numbers, right? Let's get a little bit down and dirty. What's the impact of having real-time data on business customers?
Yeah, I think what Michael had said just before about time. One of the most valuable commodities we have is time. And I'm not sure that I have an exact measurement of the amount of time saved, but having the real-time data and having access to that information, it saves our customers. Karen was describing the cumbersome process and requesting, and one of the biggest challenges we face is the client's time that it takes to gather and put together a package in the old way, putting together the information that we request and having access to that directly through the open banking, open accounting process just makes time so much more available. And then no matter how much time we save through the process, there's still 24 hours in a day. There's still an 8-hour work day. And so what it does to me is it enables us to use the rest of the day for the relationship building, the networking, and the opportunity of gaining and serving not only our existing customers, but the new customers. So the process is sped up infinitely in being able to help it, but the real the benefit is the opportunity of what it opens up and what you can do with the time saved.
Thanks for that, Dustin. And we've spoken a lot about the opportunity and what you get from it. But Michael, maybe you can share some thoughts with us as to what stops lenders from adopting a data-driven lending model, given all those benefits.
Catastrophic legacy systems is probably the best answer I can give. I can speak for most of Europe and part of the US, I guess. I guess some parts of Asia and Africa has basically jumped an entire financial generation. They went from no finance to mobile finance, so well done on them. But for the rest of us, the legacy systems are untenable. It's just in Scandinavia, again, one of the most digitized areas in the world. There's this comment that I think is become a little bit of a cliche, but cliches usually happen because they're kind of true. But if you want to change the technology system that your bank is using, and you want to make that call, you want to allocate those resources, make sure you do it on your last day at work, because it will be your last day at work. That is the case, right? And in Denmark alone, there is a penalty to go to if you want to exit. There is usually 2 or 3 different systems you can use in Scandinavia, and if you want to exit one of those, it's going to cost you 5 years of budgets. So show me a CTO that has the balls, sorry my language, to go to executive management and say, I'd like to spend 5 years of tech on changing this, and I hope I might be able to do it if I'm not fired, and we may get it to work. And then the CEO will ask, well, Nordea is one of the biggest banks in Scandinavia. They just allocated a couple of $1 billion to a project a few years ago to do exactly that, and now they've written off half of it and saying we might have to start all over again. I'm not picking on any particular bank here. What I'm saying is you've got a catastrophic mix of old systems of banks that have been bought, been merged, been divested of all sorts of different elements, and it's never been a priority. So I'm not blaming the old management parties, but I'm saying there was a risk they didn't see, and now you've got a debt. That debt needs to be paid either by you, which they're reluctant to do, or someone else will come and take and basically take you from the inside. I think that's what's happened.
Yeah. So Karen, given that tricky and possibly career-ending terrain that Michael just outlined, what advice would you give to traditional bankers looking to take the first steps into gathering real-time lending, data for real-time lending?
The biggest piece of advice that I can give is to get rid of the misconception that grabbing new technology means you have to change your lending model. I can't tell you how many times that's the question I'm asked. The first thing that we ever do, I'm a former banker, I get it. You're in market, you have to grow your book. There's so much competition happening. 9% market share loss this year is what banks realized to alternative and most innovative lenders. But grabbing new technology to grab information does not mean you're changing your credit model. So that's the biggest piece of advice that I can give. And that what you first need to do is identify what is the main stumbling block to accelerating things. Usually the most expensive thing is just the time. You're hiring expensive people who can understand relationships and are sophisticated and get how people think. And then you're turning them into glorified secretaries to chase after people to grab paper that was once digital cloud information. So we're not touching the credit model at all. And all we're doing is just grabbing the same information you were getting before and making it faster. Digitization is like opening up a tap, and instead of water coming out, data comes out. It's the same data you already were gathering. But what we really want to impart to bankers who are considering this, the most traditional bankers, is that if you're not doing this, you're walking to the well versus everyone else who's turning on a tap. And you just cannot provide a competitive service offering. It changes the conversations between you and your business customers from, can you send me your financials? And couching that in a, I just want to talk and update the, this is the call that you're having, versus I see here that your accounts receivable days are going up. We could just bump up your operating line. It would be, just click this button. That's what you're changing from and to.
Karen, if I could just keep you there for a second, and perhaps Dustin or Michael might want to jump in on this, but it's a question from someone watching, and Paul says, many of those catastrophic events that Michael mentioned happen when systems are being changed. So will banks feel they should just maintain the status quo and spend on maintenance?
Okay, so that's so true, Paul. And I would say that banks had the luxury of feeling that way up until COVID hit, because they were losing 1 to 1.5% market share over the 9 years before COVID. With 9% market share being lost, I think the hand is being forced a little. But what's really exciting about this time, and it's amazing to be here with a community bank and a neobank, because they have the same innovation leanings, right? Not every community bank and even not every neobank feel the same way about things. But here you have the time where the hand is being forced a little bit. Either you're solving the problem, as Michael said, or someone else is going to come and solve it for you, and you will be acquired. So as a result, the choice isn't, you can't operate from fear. You have to actually be the type of financial institution that's going to consider the customer first. And that will lead you to adopt technology. I don't know if you guys saw that Michael, when you mentioned the cost, my eyes opened, because the cost to adopt data is not nearly that expensive. Real-time data is it's pennies on the dollar of what lenders are earning. So the cost structures have become much less expensive, and you don't have to touch the core to do it either. No. So happy medium.
And I'd like to just to jump in and add. So basically with answering in Paul's question, whether banks feel they should just maintain status quo and spend on maintenance. Well, basically in Europe, at least 50% of their IT operating budget just to maintain status quo, right? So at least 50% is the level that you cannot come under. Some are much higher, but 50% is the minimum. So let's just take it around 50 to 60. That's the level. That means you've got maybe 40% left that you can then deploy into other projects. Most of the banks have been, over the last 10 years, deploying that into having some sort of a web mobile presence on top of old technology. But basically you're giving an old car a coat of paint, which is not at all what you're looking for. You're looking for a different product, and you're looking for, as Dustin was saying before, you're looking for a different customer experience, right? And you're not going to do that. I mean, the car's not going to run indifferent because you paint it over, right? You might feel better when you look at it, but it's just not going to get you there. So the banks will definitely need to make a choice, and they are trying to say, how do we deploy capital to uncertain and untested waters, and they don't like to do that not in technology and not in terms of data. So I think that is probably the biggest single question or problem they have in terms of that. And you can also look, a great canary in the coal mine is how many banks have put their CTO in executive management.
Yeah.
Right. They've got plenty of accountants and risk managers there around that.
Mm.
But they don't have any. I mean, where's the technology? Where's the salespeople? Right. And that is the difference. And I'm not blaming anybody. I'm saying that is culture, and that is something that you are trying to navigate in a meaningful way without changing everything, because it's not all bad. It's not at all. But there are some issues. So let's jump in.
Yeah, thanks for that, Michael. And as we only have a few minutes left, I'm keen to turn to Dustin. Sorry, you want to say something first?
I was just going to say our experience and our real introduction to Karen and Boss Insight, what was described here in the sense that what we experienced was we were looking forward to the back PPP loan process, where we had generated these over 400 loans in this rapid fire time frame, and yet we were the process of going through the forgiveness of the loans through the established process, and we were afraid that it would take the drain on the personal capital of the loan officers. You're taking activity and the normal course of business activities that we had on our plate and saying we have to go through the process of gathering more data, working through the government red tape, forgiveness. How on earth can we do that? There are only so many hours of the day. And so it was one of those necessity is the mother of invention kind of experiences that we had, where we had to come up with a way to be more efficient. That's where we met with Karen and Boss Insights, and it as of now, of our clients who have gone through our online portal and for the application forgiveness, and it's been a tremendous experience. But looking forward, we had to be at that point of, I don't know that we can accomplish this, so we have to find. And thankfully there was a way out that we've been able to use.
Great. Actual and practical examples there, Dustin. I can't believe we only have a couple minutes left. This has gone so quickly. Karen, I want to turn to you with one final question. Can you tell us an insider secret about open data that no one knows yet?
So I'm going to tell you a secret, but I think Michael and Dustin both already know it. That there's a fear around open banking because there's a fear of loss of control, but actually it allows you to really control your destiny, because for the first time you can meet the customers where they are. And I say this as a former banker, as a CEO of a company selling to banks, and as a customer, as a business customer of banks. Banks are not meeting businesses where they are. They're telling them where they have to be. But with open banking, with open accounting, you're meeting them exactly where they are, and you're serving them proactively. And so that's the biggest secret. And you don't have to change your credit models. You don't have to touch your core. You can literally just understand what you've been spending millions and millions of dollars on marketing to understand in real time. So hopefully that's a good secret. I don't know that I'm letting the insiders and the innovators here know much, but that is what we're seeing. Don't tell people what don't connect to one accounting system and insist your businesses are going to go to that accounting system. Connect to all of them. Don't tell people that they have to use one style of payment. That is literally what banking was in the past. You have to use one way to pay your employees. You have to use one style of payments. If you open it up like Michael's talking about, you're going to get the best in class fintech. In 2 years, you're going to be selling products you never knew existed, because the fintech innovators will bring it to you, and the small and medium businesses will flock to you as a result.
Thanks for that, Karen. And I wonder if we can squeeze in one more question. I know we only have a minute or two left from someone watching. Is open accounting a concept for lending to mid to large size companies, or are there available data feeds for small businesses as well, like pizza shops and gas stations? Is that one you want to pick up on?
Me? Sure. It's for both. People tend to think of banking in terms of the size of the loan, but technology, the best thing about it is that it works for all businesses. If you're using a cloud system, if you're not developing your own proprietary one, this will work for you. So it can work for loan sizes of 50K. It can work up to 20 or 30 million. That's the best thing about it.
Brilliant. Well, we are definitely out of time now. So I just want to thank the panelists. You've given us some fantastic examples around the power of data and responding to customers' needs in a crisis. So if you haven't had a chance to get your question answered by any of our panelists, please, you can connect with them in the People tab. Karen, you are at the exhibition booth and across the platform today as well. I'm going to take 30 seconds for a shameless plug here to say that we will be talking in far more depth about the needs of community banks and credit unions and the opportunities and challenges at FinTech Challenge North America, which is in 2021 on the 24th of March. Karen will be with us there as well. Hopefully Dustin will get you involved. So that's my brief but shameless plug. For now, I just want to thank all the panelists again. Fantastic. Thanks to everyone watching. And please head over to the main stage because shortly I will be leading a fireside chat looking at the age of the digital builder. So thanks again, everyone.
Thank you.
Thank you.
Thank you.